Good morning. Sorry, it took a minute for the video start. You know what day it is? Hump day! Mike. So, practical video this morning. Is everybody preparing for the contraction that we're already in? So we really were in a type of a recession before the shutdown, back in 2019. Grant Cardone was actually the guy that called this because he's got 9,000 apartments, and he said, people who are living in cities are making good money with good jobs, and they still can't afford their rent. Rents had gone beyond what a good paying job would allow somebody to pay, which meant that we were already in a recession. So then we went through COVID, and then everybody got money. Money got sprayed into everybody's pockets, and now that's starting to filter its way out. You saw Walmart cut their expectations and earnings for 2 quarters in a row. Target is soon to follow. You're seeing low-end cars. Basically the junk financing is starting to see delinquencies in vehicles. So, the bottom level of incomes are showing problems between gas prices and everything else and inflation and blah, blah, blah. So that means the likelihood is that we're already in a recession. If not, that we're going to be clearly in a recession in not too long. So we're in a contraction. So you got to think about that and prepare about that. We've talked about finances a lot. We've talked about money a lot. We're supposed to go through periods of contraction. I mean, we've been in an expansion for 12 years, which is an incredibly long time, the longest in history. Started in 2010 and has just kept going. So it's normal for there to be a contraction. It's not anything to fear. It's not anything that's out of the ordinary. And the likelihood is right now it looks like it's going to be a regular contraction and not ridiculous. Now, of course, nobody knows. We have no idea what's coming tomorrow. But what happens in a contraction? Well, when things get too frothy and too fluffy, which let's face it, that was the case with the stock market and lots of other stuff, then all of a sudden there's going to be a pullback. And the pullback happens when earnings start to go down and the stock market's already gone down significantly. That's a leading indicator. So you're going to see things that got too overextended get pulled back. This is a great time. This is a great opportunity financially. Anytime there's a contraction, it's a great opportunity financially for whatever it is that you do. If you invest in the stock market, if you invest in real estate, whatever it is that you invest in, this is a perfect time. So like in the stock market, there are all kinds of things that are on sale right now because everything is pulled back considerably. There are stocks that make really good money, not the speculative stuff, not the Teslas, not those things, that are only like 5 times forward earnings, 6 times forward earnings. Ford is a great example of that. And they have great management and they have great products. That's too low. That's way too low for a stock of that quality and that value. So stocks are on sale. There is always going to be great opportunities in the real estate market for those that got overextended. The experts always tell you don't get more than 70% leveraged. And the people that have been doing this for a long time will say 50% leveraged. Well, the people that get too over leveraged and too overextended, that's when contractions, those are the ones that get bitten. They get their hand knocked off because they got too overextended. Well, if you're sitting there with cash, it's an opportunity for great advancement because banks don't want to own property. That's the last thing in the world that they want to do. They want their notes to get paid. They do not want to be in the business of property ownership. So if you're a good customer for a bank and they've got somebody else that got overextended, they're going to call you up and say, hey, do you want to take over this property? The other person is now walking away from it. We don't want to go through bankruptcy. We don't want to go through foreclosure. If you come in, you can buy it for their note. This is a chance to buy properties for 70 cents on the dollar, 50 cents on the dollar, 30 cents on the dollar. All of the billionaire property owners that I've had the chance to watch speak and meet personally have all talked about that it was during a contraction that they made their biggest jumps. During a contraction, they were cash heavy and they were in a position when somebody called up and said, hey, I've got this opportunity, that they could do something significant with that opportunity. So recession's coming, recession's here. Usually contractions last about 9 months. Sometimes they can go as much as 18 months, but usually it's about 9, 10 months. Seems forever, but it's really not that long. What do you want to do in order to get prepared for that stuff? You want cash. You want to get your debt done. You want to be cash heavy so that when the opportunities are there, you can start to nibble and take advantage of the opportunities. They're already there in the stock market. And I'm not a huge stock market guy anymore, but you can just tell, listen to Jim Cramer on CNBC in the mornings, you can just tell all the advantages that exist. If you are in a position where you are extended, then you need to get yourself out of that position. You need to get yourself protected. Raise cash so that you can ride the wave through this. If you're on, blighted properties, you know that you're going to have some problems. So you need to get yourself in a cash position so that you can ride out the storm. Like we said, usually it's 12 to 18 months. A lot of times it's less. It's 9 to 10 months. But you might need to raise capital. You might need to go find investors before it gets too significant and raise capital so that you can figure it out. And then you'll learn the lesson and you won't be in that position down the road. The point is, winter happens. We go through seasons. We go through seasons in life. We go through seasons in the economy. We've gone through a tremendous summer and fall, and now winter is coming with regards to finances. And so you got to prepare. What do you do in winter? You stock up. You stock up on food, you stock up on clothing, you stock up on the things that you need so that you can make sure that you can ride it through the winter. It's a great time to prepare. It's a great time to get yourself ready. And then spring will come. It always does. We always get through winter and then there's spring. Good morning, OC. OC says hi. So, practical one for today. We'll talk about something more along the lines of what we normally talk about tomorrow, but there's so much conversation about this. I thought it was good that we at least touched on this topic for a little bit and just let you know, yes, that's coming. Prepare. You want cash. Look for opportunities. This is a great time to make a huge advancement in terms of your personal finances. This is an awesome time for you to make that big jump in whatever it is that you do. Everything's going to go on sale. Have a great day, everybody. Thank you very much for watching. We're all in this together. Let's take care of each other.